Hello everybody, my name is Mark Talavantos, regulated mortgage and protection expert. Now this video is 12 of the most commonly asked mortgage and protection questions that I get asked during my weekly clinics, where I offer free general information in reference to mortgages and protection. Now just a quick note, as always, this video is general information. It is not personal financial advice. Your circumstances matter to me. So any regulated advice and recommendations would require a proper in-depth fact find. And also, all protection policies, they are subject to underwriting and exclusions from the provider. So please pop any comments below. And if you would like to take part in one of my free mortgage and protection clinics, please just comment clinic below. Now, always interested on who's watching these videos, so please, if you're not sure what to ask, just tell me if you're a first-time buyer, if you're moving home, if you're remortgaging, if you're self-employed, if you're a contractor, but most importantly, are you 100% confident that you have the right mortgage rate? Do you have the right protection safety net in place for your current life circumstances? So let's go. Okay, so here we go. How much can I borrow? Simple answer is it really depends mainly on your total income, your total outgoings, your credit commitments and the lender's criteria. Now some people start with a rough multiple, but the real answer is it's all down to affordability based. Quickest way is a proper affordability check with your numbers. I do have a lender at the moment will do 7 times income multiples for people who are educators. How much deposit do I need? Again, answer is some deals start from a 5% deposit, but generally the bigger the deposit, the more options you may have and the different rates you may be offered. A deposit can be savings, sometimes a gift, it can occasionally be other sources, but it always must be evidence. Do I need a credit score? Yes. Now lenders look at your overall credit profile. Score is only one part. So look at payment history, how much credit you use, recent applications. These often matter more than what people realise. I've had missed payments. Can I still get a mortgage? Possibly, yes. It depends on what it is and how long ago it was and the overall credit file. Some mainstream lenders will accept minor historic issues. Other cases may need more specific approach. I do work with specialist lenders. Fixed or tracker rate, what is better? Well, a fixed rate gives you a payment certainty for a fixed period of time. A tracker rate can move up and down depending on the Bank of England or the lender base rates. What is better? Can't answer that. It depends on your risk cover for a budget certainty and your plans over the next few years. 2-year fix, 3-year fix, or a different fix. Now a 2-year fix can give you can be good if you want flexibility in a shorter period of time. A 5-year fix can suit people who value stability. The trade-off is usually rate versus flexibility and potentially early repayment charges if a different rate becomes available sooner. What fees should I budget for? Typically lender fees, sometimes valuation fees, sometimes solicitors and conveyancing fees, survey fees, moving costs and potentially stamp duty depending on the purchase and your buyer status. Comment below, I can give you a more detailed on your specifics. What's the difference between a lender valuation and a survey? Simple answer is a lender valuation is mainly for the lender to assess the property value. A survey is for you to commission to understand the condition and risk. So many buyers do feel that having a survey is money well spent. How long does the process take? How long is a piece of string? Answer it varies a lot, but usually weeks, could take months rather than days. The big variables are the chain, the solicitors, conveyancing, how quickly documents are provided, and whether the lender needs to do extra checks. Can I overpay on my mortgage? Answer is often yes, but most fixed rate deals do have a limit, commonly a percentage per year if you overpay. Now, overpaying can reduce the interest and term, but always check your early repayment charges with the lender first and what rules apply. What happens when my fixed rate ends? Answer is you will usually move to the lender's standard variable rate unless you do switch or remortgage. Now, many people do review their options a few months before the end date. Can be up to 6 months. Again, worth checking. Can I remortgage early? Again, yes you can, but there may be early repayment charges. Sometimes it's still worthwhile having a look because there could be better rates available, and you can compare the savings worth the costs. Now please, in the chat below, everyone, tell me, are you a first-time buyer? Are you buying a new home? Are you remortgaging? Are you self-employed? Are you contracting? If you'd like to take part in one of my free mortgage protection clinics, please just comment clinic below and we can go from there. You take care. Hello everyone. Let's just start with a couple of protection myths that I hear all the time and constantly get asked. I have death in service through my employer. Do I still need life cover? Sometimes yes, because death in service is linked to your employment. If your job changes or you become self-employed or the benefit changes, the cover may not follow you. Does it cover to the full value of your mortgage as well? I get sick pay. Why would I need income protection? Simply, sick pay often reduces after a period of time and then stops. Income protection can continue for longer. It can be tailored around that gap. I'll just save money instead. That's fantastic. If you saved up enough money to pay off your mortgage or to replace your income in full, then well done. But savings are great. Many people can't save enough to cover months or years off work or have a lump sum quickly should they need it. Insurance never pays out. Every time. So claims sometimes don't get paid out, but the policy has to match your need and the application has to be accurate. That's why full disclosure and a comprehensive advice do matter to ensure that your policy meets your requirements and the medical definitions of what you've been diagnosed with. I'm young. I don't need any protection. Well, tell you what, I was young once and I thought I was immortal, but how wrong was I? So age doesn't matter at all, and it certainly doesn't stop accidents or illnesses. But if you know what next week's lottery numbers are going to be, stick it in the comments below, please. Otherwise, we cannot predict the future. And the question is always, if your income stopped tomorrow, what would happen next month? How would I maintain my bills? How would I maintain my lifestyle? If I have children and my income stops, well, I'll leave you to think about that one. Take care, guys. Okay, so let's talk about protection. Simple way to explain some of the protection products. So you got life cover. Now this will pay out if you die during the policy term. Critical illness. Now this will pay out if you are diagnosed with a covered serious illness based on the definitions set out by the provider. Income protection. This pays out a monthly benefit if you can't work due to serious illness after a chosen waiting or deferred period. A family income benefit. Now that pays out a regular income to your family if you were to die during the policy term. So think of it like a salary replacement for a set amount of time. So, do I need life insurance? Do you know what the lottery numbers are? Now, if someone depends on you, or your income, or you have a mortgage that you want to protect, it is definitely worth considering. The goal is to keep your home and your lifestyle secure should the worst happen. Level cover or decreasing term, what's the difference? So decreasing term typically reduces over time and is often used to match a repayment mortgage. Level term, so this stays the same amount and can suit potentially an interest-only mortgage or family protection needs, or a fixed amount of money is required. Single or joint policies. Answer is, depends on your circumstances. Now, a joint life policy pays out once, typically on first death, can be on second death. Two single policies can pay out individually and can be more flexible, but the cost is more. It does depend on your need, circumstances or budget. Should I put the policies in trust? Often it can help the payout go to the right person faster and potentially outside of probate, but it's not right for everyone. It is definitely worth discussing your individual circumstances. Critical illness cover. So, does critical illness cover all cancers? Not always. It does depend on the policy definition, the severity and thresholds. This is why the details matter. Now, we do check the definitions, not just the headline. Is critical illness better than income protection? Simple answer, they do different jobs. Now, critical illness is usually a lump sum on diagnosis of specific conditions. Income protection is usually a monthly income if you can't work for a period of time due to illnesses or injuries, which often border on real life scenarios. Why do claims not get paid out or decline? Simple answer is, the common reasons is non-disclosure of the condition or not meeting the policy definitions. Good advice is about the correct application details, disclosing all your personal information correctly and choosing the suitable definitions of the policy provider. Income protection. What does income protection actually pay for? Now, income protection is a monthly benefit if you can't work due to illness or injury after a specific waiting or deferred period. Now, this can be up to your chosen end date. Often it can pay up to retirement. The benefit amount is usually based on a percentage of your income. 60, 65, possibly depending on provider. What is the waiting period? What should I choose? Now, a common approach to this is to match either your savings or your sick pay. If you have 1 month's worth of savings or sick pay, you may choose a 4-week waiting or deferred period. If you have a longer employer sick pay, you may choose a longer waiting or deferred period. Own occupation versus any occupation. Simple answer is, own occupation is usually the standard, however circumstances may vary. Now, what does it do? It assesses whether you can do your job. Definitions may vary by insurer, so please check the wording carefully. Does it cover mental health and back problems? Now, many policies can be subject to underwriting and the terms, but it can vary by provider or insurer, and your personal medical history will be discussed and underwritten. This is a key area that we would look at during a fact-find meeting and comparisons. Does income protection cover redundancy? Usually, no. That's a separate policy. Redundancy is typically separate. Income protection is mainly for illness and injury. What is a family income benefit? Now, family income benefit pays a regular income for a fixed period of time to your family if you were to die during the policy term. It's often a cost-effective way to look at childcare bills and day-to-day costs that would be lost for a salary not being there anymore. Who is the family benefit best for? Now, generally, families with children who want an affordable way to replace an income until the children are of a certain age. So, finally, are you confident that you have a comprehensive financial safety net in place should the unexpected happen? Do you have a policy that you want to check to ensure that it matches your current life circumstances and requirements? If you do, just message protection below and we can start from there.